FHA or conventional. These are the two most common loan types for home buyers, but most people don't really understand how different they are. I'm Nikko Jones with NEXA Mortgage, and today I'm breaking down what each program offers, who they're best for, and how to decide which one fits your situation. Let's start with FHA. It's insured by the Federal Housing Administration. That means lenders can offer more flexible terms, lower credit requirements, and smaller down payments because the government backs part of that risk. The minimum credit score is around 580 for 3.5% down, or from 500 to 579 credit score with 10% down. You can use gift funds for the entire down payment, and it's more lenient on debt to income ratios and past credit issues. The trade-off, you'll pay mortgage insurance both upfront, 1.75%, and monthly, and that usually sticks around for the lifetime of the loan unless you refinance later. Now, conventional loans are the classic private market option. They're not government insured. Instead, they follow Fannie Mae and Freddie Mac guidelines. The minimum credit score recommended for a conventional loan is 620 plus. Down payment can be as low as 3% for first-time home buyers or 5% for others. Private mortgage insurance applies if you put less than 20% down payment on your house, but it drops off automatically once you reach 20% equity or 22%. Rates can sometimes be slightly higher for lower credit borrowers since there's no government backing, but higher credit clients often get better pricing than FHA. Here we have a side-by-side, just going over the comparisons, the differences between FHAs and conventionals. For down payment, like I said earlier, 3.5% down payment is the minimum that you can get with an FHA. Very useful as a tool because if you're not a first-time home buyer, the lowest you're going to get is 5% with conventional. If you are a first-time home buyer, that is, the lowest you go is 3% on conventional. If you're a first-time home buyer, credit score requirements differ vastly. The credit score minimum for FHA and still qualifying for that 3.5% down payment is 580 and above. And credit score is recommended for a conventional loan to be 620 plus if you're going to go the conventional route. Now, to get private mortgage insurance with a refinance, that's the only way you're going to get removed on FHA. It's there for a lifetime of the loan. It's just there. Conventional loan, it will come off at 20% equity requested, or automatically at 22%. Actually, that's conventional loan. It doesn't last for the entirety of the loan. What is there until you got 20% down on your home, and you got 20% equity built in your home? Ideal buyers. The ideal buyer for FHA loan would be a first-time buyer or someone that's rebuilding their credit. And then the ideal buyer for a conventional loan route would be someone with very strong credit, higher credit limits, higher credit scores, 740 plus, maybe 700 plus. And those with long-term savings that can take advantage of the 20%, buying that down and just entering into the deal with no private mortgage insurance. Save tons of money like that for the entirety of the loan that way. So if you're rebuilding credit or you want a smoother approval, FHA can open doors. If you built up credit and you plan to stay long term, the conventional might save you money over time, longevity of the loan. So it's not about one being better than the other. It's about what fits your timeline. FHA can get you to the door faster, especially if you plan to refinance in a few years. Conventional can reward patience if your credit and savings are strong. I've seen clients using FHA for their first home, then refinance it to conventional once their equity and credit has improved. That's a smart long-term play. If you're not sure where you fall I can help you compare both side by side with real numbers, real payments, and no guesswork. You can start today at NikkoBeansMortgage.com and click on the apply links. Or you can reach me directly at 743-330-1454, or you can email me at njones@nexamortgage.com. Again, NEXA Mortgage is an equal housing lender, and we're hoping you understand your options, not just your rate. As always, stay cool.